Hey everyone. A lot has changed since I shot my last video back in February. At that time, the market was having some issues and there was a lot going on, and I wanted to address it, and the same goes for today. Back when we shot the last video, oil was at $90 a barrel. It now sits at 120 or probably slightly north of that. Inflation was at about 7.5% and now sits at around 8.6%. But again, we factor in food pricing and energy pricing, we're probably north of double digits. The yield on the 10-year Treasury back in February was 2%. Today, the yield popped up to 3.4% and then settled a little bit below that. But that is an extraordinary jump from just a few short months ago. And the other big geopolitical item is what we've been talking about for some time, but Russia hadn't invaded Ukraine at that point. Now we've had months of the war going on and a lot of uncertainty in that regard for sure. So as of today's drawdown, the S&P has indeed hit a bear market in down just about 21% on the year. The NASDAQ with tech-heavy stock positions is down over 30%, and the bond aggregate is down 10. Actually, it's close to 11% year to date. I've talked to many of you about what my position is on the Federal Reserve and how they've waited too long to start to hike, and in fact have caused a lot of this inflation problem. And going all the way back to 2008, I think the Fed did a lot of good things, but they've kept rates too low for too long and pumped trillions of dollars of capital into these markets. And so what do we get? The law of unintended consequences of this instability, and now they're hiking and trying to fix things. And so the meeting on Wednesday of this week, they'll come out and they'll hike. I think we're probably pretty much well baked in that they're going to hike 50 basis points, may very likely be 75 basis points, and I wouldn't rule out a full 1% hike, but we'll see. So we'll know more on Wednesday. So as clients call us or have questions, right, we are in times of danger, like some of the things I've listed on my notes here. We are hardwired, our neocortex, we're hardwired to act. So people say, well, should we do something? We should run, we should fight, we should do something. And the reality is we've done it, right? And I continue to mention this. We have our clients, we have you diversified. We know what your long-term planning is. We know what the family needs are. We know we can't time the market and get it right. Tomorrow the stock market could be up 2 or 3%. We can't time this. We also know we typically don't need all of our money at one time. We use the money over an extended period of time, whether it be from retirement all the way through life expectancy. So we stay diversified, have the right allocation for each family. So I always talk about this. The investment committee, we talk about this stuff every day. The entire team is here for you if you need anything. So in these uncertain times or a lot of market volatility, we think we'll be around for the rest of this year. Please don't hesitate to call, raise your hand and ask questions. That's why we're here. Thanks a million. Talk to you soon.